Good day everyone, welcome back to my channel. Today we are going to go through the 3 things you need to know for 2024 to be a successful trader in the boom and the crash market. So first of all, the 3 things you need to know is understanding market structure shift, liquidity, and where to enter on a point of interest, a fair value gap, and order block. Okay, so let's quickly go through some examples how to see it, and then we can come to the live charts. Alright, market structure. So the first thing we need to do, we need to understand how market structure works, where to identify the highs, where to identify the lows. So here's a nice clean example, as you can see. So the chart has a high, chart has a low, high, low, high, low, lower high, lower low, lower high, lower low. So those are the main things you need to understand on how market structure works. So to identify a swing high, it needs to consist out of 3 candles: candle 1, candle 2, candle 3. The middle candle needs to be higher than the candle on the left and the candle on the right. That's how I identify a swing high. If I want to identify a swing low, it's just the opposite. So it's candle 1, candle 2, candle 3. And that's how you identify a swing low. So you got on the high, your middle candle needs to be higher than the candle on the left, candle on the right. For the swing lows, your middle candle needs to be lower than the candle on the left, candle on the right. So swing high, swing low, swing high, swing low, high, low, high, low, high, low. So that's the basic market structure, what you need to look out for. Alright, let's go to the next step, market structure shift. Alright, so when we have our price action, we marked out our high, low, high, low, high, low, high, low. As you can see, what happened here, we had our high was created, this low took out this high, so it validates this low. High was created, got a retrace. As soon as this high is being broken, we are looking at the low that caused the up move to break this high. So remember, middle candle needs to be lower than the candle on the left, candle on the right. Low was created. Now this low got taken out by this high, so this becomes my new high. This was the low that was broken, so there we have our market structure shift. Retrace, retrace. The high that took out this low was this one, and for that reason this high is the last swing high that broke this low, so that's why this one is valid. And then we continue with the trend. So high, low, high, low, high, broke market structure, high, low. Alright, here we are on the next step, liquidity sweep. Let's quickly mark out. We got our high, low, high, low, high, low, high, low, high, low, high, low, high, low. As you can see, it looks a little bit different than the previous chart. We have a high, low, high, low, high, but now this happens. This low being taken out, we are in an uptrend. This low was taken out. So instead of retracing till here, for example, and go down, we continue to push up. High, low, high, low, high, low. Then again, we broke this high, and then we came down again. So this we call a liquidity sweep. So if we have our market, our chart in front of us, then let's say, for example, there was an order block or a fair value gap right here, the push that caused this impulse move to create this high. So high, low, high, big impulse move. Price never came back to our point of interest, created a new one. Because this was a strong move, this low never retraced to our point of interest. So we're going to mark this out as liquidity. Because we are in an uptrend, we need to wait to see what the market is going to do. So we created, for example, an order block or fair value gap. High was created, price came down, took the liquidity, and then you'll see when liquidity is taken, normally there's a nice big push to the upside. Now, high, low, high, low, high, low. As you can see, we changed trend down here. Again, let's say, for example, there was an order block or fair value gap. Price never came back, didn't touch our point of interest. Price came down, liquidity got swept, entered, price entered our point of interest and went straight down. Awesome. So let's go to the chart example so I can show you exactly how this looks in the chart examples. All right, so let's have a look at Boom 300, the 1 hour time frame. So as you can see, we got a high, low, high, low, high, low, high, low, high, low. All right, let's just see what's happening here. Okay, so we got our high was broken. This was the last swing low, came down. As you can see, what happened here, because we are in an uptrend, market tapped our order block down here. As you can see, it was a nice perfect tap, high. So this still is my valid high for me to confirm, are we still in an uptrend. So this high needs to be broken so that we know we are still in our uptrend. You see this one was a little bit lower, it never broke that high. So this is still my most recent valid high, low, high, low. The reason why this is the last valid low that I'm considering is because this impulse move up took out this high. So that's why this is my valid low. Low, high, low, high, low, high. Alright, so let's quickly delete this. Alright, so let's quickly see what happens. Let's just quickly recap. So price came to a point of interest, tapped our order block here. This was the liquidity that was taken. Let's just mark it out. This is my valid high that needs to be taken out. Liquidity was taken, point of interest was tapped in, price went up. Now what was happening here? While when price tapped into our point of interest, as you can see that big impulse move, we created a fair value gap there and an order block. This is really good confirmation. I love to see these types of setups. A fair value gap above an order block, it's just like a double confirmation. So as you can see, fair value gap, order block. What happened here? Price never came and tapped into our fair value gap. Let's just delete this fair value gap quickly so you can see. This was liquidity. Liquidity that was taken out. Price tapped into our fair value gap. Price went up. So we broke this high. So this becomes our new low. What did we create? We created a order block. We created liquidity. Let's quickly jump down to the 30 minutes so you can see what I mean. As you can see on the 1 hour, it never entered on the order block. Let's see what's happening on the lower time frame. As you can see, the order block there. 3 consecutive candles can also count as an order block. It never touched the order block, but what's above the order block? Literally another fair value gap. Remember I said in this example, I love to see an order block and a fair value gap. So price went up, came down, tapped into our point of interest. Where are we going to target? Our high that was created. And we're going to target there. Tapped in and price went out. You got out of your trade. To go back to the 1 hour. Alright, so we broke this high. This is our low. What's down here? An order block. What's above the order block? A fair value gap. Price tapped into our fair value gap. Where's the liquidity? There's a bunch of liquidity. There's a low, internal low. There's an internal low. All of these are liquidity. Liquidity got taken out. So that means everyone's stop losses got hit. People are out of the trade. And you enter right here. And where do you target? This high. Do you see this high? Right? This high. That's the highest point. That green candle there. So that's candle number 2. So candle 1, 2, 3. Candle 2 is higher than candle 1 and 3. You can and it's the highest point. That's why I use that one. Look at this low. This red candle here is your lowest one. Candle on the left is higher. Candle on the right is higher. So that one is my low. Then again, this green candle is the highest point. Candle on the left is lower. Candle on the right is lower. That's my high. Again, yeah, the red, let me just delete this order block quickly. The red candle is the lowest. Candle on the left is higher. Candle on the right is higher as well. When you zoom in, you should see it. higher. That's my low. Again, same this side. This green candle is my highest. Candle on the left is lower. Candle on the right is lower. Then again, this left candle, this is my lowest point. Let's just delete this. Candle on the left is higher, candle on the right is higher. The one in the middle, candle 2, is the lowest one. Same with this one. This red candle is the highest, the wick there. So the candle on the left is lower than that wick. Candle on the right is lower than that wick. So that's my swing high. And you can literally go on and on like that. So that's the strategy you can use in 2024, literally by knowing market structure shift, and liquidity. So when we go onto the lower time frames, let's quickly go to the 30-minute. You will see here, for example, we were internally in a downtrend. This was the high that made a new low. We broke that high, so that becomes my market structure shift. Then again here, exactly the same. This internal high was the one that was the high that was created that took out this low, and then the price came up and broke it. So that's going to be my market structure shift. Exactly the same, yeah. This was the last high that was created, the internal high that was created before we tapped into our point of interest. Price break through it, so that's my market structure shift. Same thing here. This high, liquidity got taken, tapped into our point of interest, market structure shift, and we are in an uptrend. Let's quickly see. Liquidity got taken, market structure shift. We have an order block. After it tapped this order block, that red candle there, tapped into our order block and price went up. So if you didn't enter here, you can go onto the lower time frames and do exactly the same. Low, high, low, market structure shift, point of interest, enter, target the last high on the higher time frames. And that's how I would trade in 2024. Market structure, understanding liquidity and liquidity sweeps, and enter from your point of interest. Order block and fair value gap. Don't overcomplicate your strategy. Keep it nice and simple, and I promise you, you will make money if you keep it nice and simple. Please leave a like and a comment, and then I'll see you in the next one. Cheers.